Good afternoon, everyone. For those that watched yesterday's video, we had a pretty nice day in terms of executing on the game plan we set yesterday. To recap, if I scroll back, hopefully this covers yesterday's activity. No, let's go ahead and make this a 5-minute chart. We'll scroll back. Based off of what our cumulative tick data was showing us yesterday, we expected to see a likely trend exhaustion into today. So the game plan that we had set out was, in the morning, we expected to really see some sort of a gap down lower, and then off of that gap, essentially a rally for the rest of the day, at least into the final hours of the market. Now, if I show you, and we also had a very specific trigger signal, which was off of the SPY chart, and that was looking for this first green edge signal arrow via the cumulative tick pro indicator where all of the Boolean conditions were met. Now, if we take a look via the SPY chart first to see what happened, in the morning we had exactly that, right? We had a gap down lower, and then for really much of the day, we ended up trending upwards. This is how we use the data, all the preparations, all the stuff that we discussed in that cumulative tick pro tutorial. Today was a way to actually execute on those learnings and make that count in terms of dollars. Now, in terms of what the actual trade looked like from a percentage gain, at this point right here was when I got the 326, 327 call debit spread. That was the out of the money call debit spread at that time. The reason why you chose 326, 327, that was just arbitrary. We talked about this in yesterday's video as well, but it was this idea of if you took the fib swing high to swing low, 50% retracement took you to that 325.44. The 325, 326 was not giving you that 1 to 3 risk to reward ratio. And so that's where coming up to the 326, 327 allowed you to essentially purchase that for 25 cents. That was a dollar wide, risking 25 cents to try and make 75 cents. Of course, the 75 cents is only made if you hold it into tomorrow. But I'll give you an idea of what the P&L was, both with the 25-cent debit spread, along with the straight up calls here, where the 326s at that time were going for 86 cents. Now, if we take a look to see what happened, if you missed this first move up, then you had really the S&P continue to fall in that subsequent hour. This is where I'll load in the futures volatility box, which executed on that game plan as well. But leaving that aside here, in this fall down lower, after that we had a nice rally up into our 326 zone. This is a 618% retracement. This is about as picture perfect of a trade as you could get. This 25 cents was worth close to 55 to 60 cents, depending on what you actually ended up selling it at. I got out at 55, and so that was a nice gain in terms of a very low risk trade that almost all account sizes should be able to handle. And the entire risk was 100% of this debit paid, 25 cents or 25 bucks per one lot in terms of the debit spread. Now, this 86 cents, for those of you that don't mind trading just a straight long call, this 86 cents ended up being worth a lot more. This, I think, went up to something like 225, something of that sort, even higher, I believe. And so that was a really nice gain in terms of a dollar amount. However, your risk was also a bit higher there, 86 bucks really per contract for something that expires tomorrow. And that's where I do still like the idea of a debit spread here, although the gains are what you would consider a little less negligible. I think it also gives you a way to stay protected. Now, if we come into our 1-minute chart here, let's switch over to a chart of the S&P futures. Starting off in the morning here, off of the scalper volatility box, we had a very clear idea that once we breached our volatility box entry lines in that first hour, we continue to just trend upwards, right? And so this in itself is a bullish sign. This is also our sign to then switch over from our scalper to our aggressive volatility box models, which if we load in the aggressive, you'll see that that did a much better job of containing volatility in that first hour. Now, something that I thought that was interesting with the futures volatility box is via the scalper here. If I come back in right here, you'll see when we had that decline, which if you remember, this was that S&P decline as well on the SPY options. That's where you came right into what is our target line for our short side, right? So just an interesting idea, but this entire zone was the one that was triggered, of course, via the scalper models, which were the more aggressive models to use today, and not the ones that I really would consider valid. Now, if I switch over, though, to a chart of, say, something like the Russell, thought the Russell in that morning was a little bit more interesting, where in that first hour, we had the Russell really slam into our volatility box lines, then bounce from there, again, giving you the confidence to continue to use the scalper models. Now, the short is not the one that triggered real time. It was only the long that triggered, where you had price action, again, fall into our volatility box entry lines. gave you multiple edge signals along with an opportunity to enter at the sign line or better. And from that point, the Russell as well, in terms of the actual futures market, along with the IWM options, along with the M2K futures contract, the micro version, all gave you a really nice winner for a similar trade idea, right? It was all looking for an initial move down lower in all four of our indice markets, and then a nice trending up move for the rest of the day. And we saw that trending up move really start to fade right around that 1030-ish zone. And then for the rest of the day, we then continue to correct back down. So I thought that was a very brilliant execution of the trade plan that we set for ourselves yesterday. It was a very clear just game plan that we had laid out, right? It was looking for aggressive longs on the stock volatility box, which by the way, today went 70%. You had 10 different trades that hit the live scanner, and 7 out of those 10 were winners. So that was a very nice plan as well for all of our stock volatility box members. For futures volatility box, we had the Russell, right, which was this area right here, which actually triggered the trade. Now, on the rest of our markets, so Dow was also a scalper volatility box trade. We hadn't breached that first hour, but we didn't breach the cyan line here like we did in the Russell. We did breach that first zone, the more aggressive zone for those of you that are looking to trade via DIA options. And outside of that, we then had our short that was triggered in that 1030 zone when we had those lines breached, which then helped you capture this side of the move, right? So, yeah, whichever way you were looking at, the game plan helped us play the long move. The Dow then helped us catch the short move once we had slammed into our volatility box lines in that 10 to 11 a.m. Pacific hour, where again, you hit the volatility box, you had the edge signal. After you had the edge signal, we had one more retest into our volatility box ion lines before we saw the ultimate puke down lower. So hopefully this gives you an idea of how to use not only the game plan, for those that watch the Cumulative Tick Pro indicator, that's where we also use just a good amount of data to try and backtest that data, create something that we think works more often than not, and then use that as really a game plan to try and trade these moves whenever they do happen. Of course, this Cumulative Tick trend exhaustion doesn't really trigger all that often, right? Yesterday, we did a look back over, I think, the past 30 days, and we only found 3 different occurrences, with then today being the 4th occurrence. So now, next time that happens in the future, we're again ready for it. I'll revisit, maybe make another game plan for the future. But in terms of all of yesterday's ideas that we had, both the stock volatility box trades gave you 7 out of 10 winners. The futures volatility box trades, the Russell lets you capture the long, the Dow lets you capture the short, and then the actual SPY options trade that we set up allowed you to have some pretty nice winners based off of if you did a debit spread or a straight long call. All right, hope this recap helps. We'll see you in the next update. Take care, everyone, and good luck trading the final day of the week.